Hi, this is Ian Coleman from PIA First. This is this week's video analysis for the 20th of August for the dollar index and the FX majors. We're going to start off with the dollar. We're going to break down through time frames, highlighting support and resistance levels, what we believe is going to be the main features next week, and then we're going to look at the majors and do the same. So we've got the dollar index daily chart in front of us. We're still looking for a bullish Elliott wave formation to have completed. So wave 1, wave 2, up impulsively in 3, down in 4, and then what we believe to be an extremely choppy fifth wave. Now we've surpassed the 261.8% extension level. I suppose the most important factor here is that we broke out of this wedge formation to the upside and not the downside. We've now got reverse trendline support at 95.82. If we go to this time frame, is again the weekly chart, we can see that we've broken out of this channel formation to the upside, and again we've got reverse trendline support at 95.56. We have stopped, paused close to 97 the figure, and in between the 50 and 61.8% pullback levels. Now if we go to this chart, again it's a weekly chart, but I think the most important factor here is what we've seen last week. Now we've seen an inverted hammer. So basically all of the initial weekly net gains have been reversed and sold into. We've got a Marubozu level at 95.73, so we've got these three different levels to the downside that we're going to have to contend with this week. That's the midpoint from the open and the close of this week's price action. Now, why I say that we can't really have a definitive view on where we believe the dollar's going, because we're really going to have to look to see where we close this week. If we close bearish and around about 95 the figure, then this free candle formation will be an evening doji star, and it will highlight, or hopefully highlight, that a top is in place for the dollar. If we get that, then we're going to be looking for an aggressive move lower to around about this level, 91.60. Now, on the calendar, there's not a great deal on Monday. On Monday evening, we've got RBA's low speaking, and then we've got RBA minutes very early on Tuesday morning. But I suppose the most important factor or factors for next week is the FOMC minutes on Wednesday. And then we've got Jackson Hole Thursday, Friday, Saturday. So there's plenty of scope, if you like, for news that could influence this weakening in the dollar. So we're going to reflect that back onto the FX majors. We'll break down the time frames quickly. Monthly chart, we're in a bearish channel formation. Now, the reason I'm highlighting this is because this area here, which is around about 114.50, was a previous area of resistance, so it now becomes support, and you can note that obviously levels this month are being bought into. If we go to the weekly chart, then again similar to the dollar index, levels between the 50 and 61.8% Fibonacci's are being bought into. If we go to this chart, again, reverse of the dollar, there is scope for a 5-wave Elliott wave formation to now be complete. Important level this week is 114.85, which again is a Marubozu level. If we go to a shorter time frame, and this is the 4-hour chart, and the reason why I've highlighted this, because we don't normally go down to shorter time frames, it's basically because of where our bespoke resistance levels are. Now we look to have broken out of a reverse head and shoulders pattern, so left shoulder, head, right shoulder, neck. The projected target level is around about 115.05, but like I was saying, the important levels for us this week really is this 61.8%, 161.8%, and then up to here at 116.33, and these are our bespoke levels. So this one lines up with the Fibonacci. This one lines up with the previous swing high. So maybe just a pull up early on Monday and then a retracement lower, which would obviously be the prime place to then get long for another drive to the upside. So we are turning bullish on euro dollar. I think for a medium term call we really need to see whether or not we do get a reaction at 114.76 early next week. Sterling dollar, again, just going to this time frame, 5 wave, Elliott wave complete. Moving down, we've got a Marubozu level at 128.82 that needs to be taken out really next week. We've got a doji candle which highlights indecision. We've also got what we call a DMARC 9 count on this weekly chart, and they normally highlight that at least a correction should take place. So we are turning bullish again on sterling dollar. If we go to this time frame, we've got the first resistance level is 128.18, which is the breakout level or the reverse trend line resistance, and it's also close to this previous swing high, so that's not to be ignored. But we haven't really got anything in the way of bespoke resistance until here, which is at 131.20 and is a previous congestion zone. And the reason we're going to go onto this time frame again is because this is basically where our bespoke resistance levels are going into next week. So there is scope for quite an aggressive move to the upside. Now if we look to this intraday chart, this looks to be forming higher lows and in turn making an ascending triangle pattern. So a break to the upside early on Monday. Let's just move that lower. And then we'd have a measured move target, which should virtually be on our first resistance level, which is at 128.44. So we are immediately bullish, and the reason that I've left this like this is that we're going to then project up to there. We can see that this 261.8% extension level, if we get a reversal here to form the first wave, so first wave, second wave, up into the third wave, congestion zone, previous support is now resistance, and then a break of there to possibly take us up towards 131.40. So we are immediately bullish, but we're going to watch for a reaction around about 128.44 for a correction to then buy into for a medium term call higher next week. Dollar Swiss, again, not really a favoured pair to play. How many days really have we seen little net movement in this pair? 74 days where we've seen pretty much consolidation. Now, I still believe that this head and shoulders formation inside this pattern is possibly alive. We really need to see a break of 98.94 to take the pair down to a measured move target at 96.93. The reason I don't think this is going to be as strong as the up moves in euro dollar and sterling dollar is because I do believe that sterling Swiss looks quite bullish. So in other words, not really, it's going to take on sterling strength more than Swiss weakness, if you see what I'm trying to say. And also euro Swiss looks quite bullish to the upside. So I think it's going to be more about euro strength, sterling strength, than it is going to be about Swiss weakness going into next week. Dollar yen, again, a bit of a similar story. We've seen some prolonged consolidation, if you like. If we look to the weekly chart, last 4 weeks, we've really seen little in the way of any movement in this major pair. To the downside, going into early next week, 110.22 is bespoke support, and then we really haven't got anything until 108.26, which again is near previous swing low and near 61.8%. I would expect price action to continue to be mixed and volatile. We're going to be looking at selling into rallies for a move lower, and then if we do get down to around this level, we're going to be looking at buying into dips for a possible base in place. But at the moment, it's very mixed, very volatile. I think intraday trading is going to be very difficult in this major pair. Dollar CAD reacted quite aggressively after the figures on Friday from levels close to the channel top. This still looks like a flag at the moment. We've got some bespoke support at 129.19, which is close to the 61.8% pullback level at 128.55. I think if we get any correction to the upside on Friday, then the Marubozu level, which is coming in around about 131.05, is going to be quite attractive, because you can note as we go back, just scrolling back, that it's been quite a pivotal level all the way back to this spike on the 20th of March. So really looking to sell into early rallies for a move to the downside next week. Aussie dollar, let's break down some time frames here, because again we've got RBA minutes on Tuesday. We can see that trendline support held 71.98. This is in a very large expanding wedge formation that has an eventual bias to break to the downside. If we go to this time frame, we've got an ending wedge pattern. We retested, we've moved down towards the, or through the 61.8% pullback level. We've now got a Marubozu at 73.48, and we've got bespoke resistance at 73.50. But if we go to this time frame, which again is the intraday time frame, we look like we've broken a head and shoulders to the upside. First resistance at 73.22, and then I said at 73.50. So it's sort of around this 161.8% extension level. The measured move target for the head and shoulders breakout is at 73.68, and then 74.46 is overextending this 261.8% extension level. So going into next week, we'd only really look to buy into dips for a move again to the upside. Euro sterling, the daily chart, we're looking for a 5-wave completion. We have seen 3 days of net gains towards the end of last week. If we go to the intraday chart, we can see that we had some stalling in price action close to the 61.8% pullback level at 86.79. It's really got to break this trend of higher lows to confirm the medium-term negative bias, but this could potentially be seen as a head and shoulders. So left shoulder, this is a very out of line, if you like, neckline, and then a right shoulder here. There was a DMARC exhaustion count on the intraday chart last week that didn't hold. It was actually had a projected stop of 76, and believe it or not, this currency pair made a 77 high, so it did take out that stop level. However, we are bearish on euro sterling. If we go to euro yen, and again I think we're going to be temporary bullish in this cross currency. In an expanding wedge formation, we've got a Marubozu level at 127.44. We've got trendline support at 123.95. But if we go to the intraday chart, this one has still got scope for buying dips, I believe, at the beginning of the week. So I have put the Fibonacci extension levels on because basically the 261.8% extension, which is at 129.03, is very close to our bespoke resistance at 128.93. So I do believe that that's potentially the target level for this week's price action. But our first resistance level looks quite strong because we've got combined time frames showing resistance around here. It's at 127.06. So I'm just wondering whether or not we'll possibly just pull up to this level early next week and then pull down, probably with yen strength as opposed to euro weakness, and then make a head and shoulders, reverse head and shoulders pattern, and then break higher to the upside. And in fact, if we were to put just a measured move target on here, and that formation would actually play out quite well. So in other words, left shoulder, neckline, head. So we move up for a right shoulder, we then move back, we move up to the neckline, then move down to form a right shoulder, and then we get impulsively bullish on that cross currency. Okay, that's what things are looking like in my eyes at the moment. I wish you all the best for this week, and we'll be in touch again soon. Okay, thanks very much. Bye now.